The Chinese yuan has been gaining ground since early morning, and the US dollar fell from its 2 month highs. The main reason for this movement of the currencies of the two strongest economies was mainly statements by policymakers. They also influenced the price of oil to some extent. Over the past 2 days, the price of crude oil has surged by more than 3.5%, and this sharp rise was the commodity market's reaction to the destructive Hurricane Milton, which swept along the US East Coast. Let's discuss what other factors are influencing the markets today and how the dollar, euro, and other assets might finish the week in this context. Economic statistics is setting the tone for the euro-dollar pair. Interestingly, the data worked both in favor and against the US dollar at the same time. Reports from the US showed a rise in consumer inflation, while the forecasts predicted a downtick to 2.3%. The annual CPI instead rose to 2.4. In a separate report, the number of initial jobless claims reached a new 14-month high of 258,000 last week. A weak labor market is an argument in favor of a faster rate cuts by the Fed Reserve. High inflation, on the other hand, requires the opposite action. What will be the U.S. central bank choose? For example, Atlanta Federal Reserve Bank President Raphael Bostic has already stated that he's definitely ready to skip rate cut in November. In this scenario, along with a small 25-point cut, is a positive for the US dollar. As a result, the US currency could end its second consecutive week of growth. All of these overseas factors are already making a bearish impact on the euro. But today, the situation worsened due to the internal Eurozone statistics. Markets found out another drop in inflation in Germany. The annual CPI fell to 1.6% in September. As a result, the European Central Bank will again have to cut its refinancing rate on October 17 and thereby push the euro down even more. So, the euro-dollar pair may resume its slide today after yesterday's drop to a 9-week low. The critical support level of 1.0900 could turn into resistance. If that happens, the euro holders could be in serious trouble. However, analysts also consider a softer scenario for the euro-dollar pair. That's a short-term rebound because the euro is being oversold. In this case, the instrument is likely to move towards the psychologically significant level of 1.1000. In the first half of Friday, the euro attempted to hold its ground, trading within the daily range of 1.0933 to 1.0949. At the same time, investors should note that the US dollar maintains bullish momentum, although it seems that the euro-dollar pair has exhausted its growth potential for the movement. It may go through another bearish stage today, right after the release of the US factory inflation data. Forecasts expect the annual PPI rate to slow from a 1.7% to 1.5%, and this would give the Fed Reserve a reason for other sharp rate cuts, allowing the US dollar to undergo a long-awaited correction. However, if the slowdown in the factory inflation is smaller, it does not happen at all, the US dollar is likely to assert its strength. The oil prices are also expected to rise, driven by three factors. One of them, of course, is the powerful hurricane that hit Florida state. Rescue services will need to waste resources to deal with the aftermath and to help those affected. As a result, the price of crude oil is likely to increase. However, today, Brent crude has entered a consolidation phase, trading within the daily range of $78.10 to $79.40 per barrel. Hence, this factor is gradually losing its bearish impact on oil prices. Nevertheless, two other bullish drivers may come into play in the near future. The first is the new risk of supply disruptions due to the conflict in the Middle East. The second driver is in news from China, the world's largest crude oil buyers. The Minister of Finance is due to deliver a keynote speech on Saturday. Beijing is widely expected to introduce additional stimulus measures to shore up its shake economy. So, Chinese assets, including the yuan, may also find increased demand on the global market. Meanwhile, the yuan ruble pair is trading at its highs. It's all about the US sanctions that come into force this weekend. The yuan ruble pair is consolidating today in a very narrow range of 13.56 to 13.74 because the yuan trading could be halted on the Moscow exchange in anticipation of further developments. The dollar ruble pair is also consolidating around the previous reached levels. If trading on the Moscow exchange continues in the same mode from a Monday, the Russian currency may even recover some of its recent losses. So the main factor behind the ruble's weakness has been the prospect of a complete halt to exchange trading on the Moscow exchange due to the US sanctions. If a trading is actually banned, the market will have to adjust. And for the Russian ruble, this means only a slight decline, but not the catastrophic consequences. After all, this risk has already been largely factored in the current exchange rate of the Russian currency. So that's all for today. We continue to follow developments in the financial markets. Subscribe to the channel and follow news with us. So see you soon.